And so I have finished reading a single chapter of my old textbook, and yep, now time to test if I really understood what I've read. Wait. Saan man? Dara. Ayan, para. Oh, napakapangin sa room. So, discussion questions. So, okay na. Nice ang ko eh. And so, discussion questions. What is an accounting information system? What must be considered before it's set up? So, an accounting information system is it's basically the the system for accounting in a business, like how a business keeps a record of its business transactions and how they account for it. Like, it's a system to see the performance of the business, something like that. Like, you record the sales, then how are you gonna you record the expenses, and then you use this information to get an accurate accounting information. So yes, that is an accounting information system. It's the system used by a business to get accurate accounting information. And everyone has different accounting information systems in their business. And so yeah. So what must be considered before it's set up? Oh my gosh, I forgot already. So what must be considered? So other. So you must consider the efficiency, the cost benefit principle. I know the efficiency, that using this accounting information wouldn't cost the business too much. Like, for example, if your accounting information system is too complicated, then you wouldn't be able to use it as to the best of its capabilities, because even you would have difficult time in using that accounting information system. Next is to protect the entity's assets, the control principle, which is your accounting information system should now minimize waste. So yeah, so you should also consider that the accounting information system isn't susceptible to theft or losing. Like, it's not easy for accountants to cheat the owners. So yeah, there should be ways to for other people to verify the information of the informations provided by the accounting information system. And the compatibility principle, which is your accounting information system should be compatible with its users. Like, the organization would be able to use it, not just a specific part of the account, or maybe for a specific part, so that yeah, whatever fits the business the most. So the accounting information system should fit the business. And to be able to accommodate growth in the volume of transactions, just reading. So the flexibility principle. So the accounting information system should be able to adapt with the changes of the business. And not just a one-trick pony. So yep, that was just the first question. So the second is enumerate the elements of the financial statements. Was the statement of financial position and the statement of financial performance. I think that's it. There were other elements under those two, but yes, we'll come to that. At least in this chapter, at least there will need to. So under the financial position, there is the assets, the liabilities, and the equity. So in the statement of financial position, you can see the basic accounting equation, the assets, the liabilities, and the equity, I think. And yeah, you can track the assets, the liabilities, and the equity. And while in the statement of financial position, you can see the income and expenses of the business, whether you're earning or you're losing. And so yeah. And so what is the basic summary device of accounting? What does it contain? What is the basic summary device of accounting? The T account? You know the T? What's the T or something? Yes, the account. Yeah, the account. So this is the what are the basic summary device of accounting. So the account contains, the transactions that contain similar effects or contain similar the accounts that are oh my gosh. So the account contains contains accounting. So the account contains the congregated but combined amount of that account. For example, the account cash would contain the movement of cash, the debits and credits of cash. So yes, it is a T. It looks like a T. So yeah. So yep, that's the account. Difficult to understand, I know. So yeah, that's it. So that's it. So the account. Kung answer ang question. So the basic summary device of accounting is the account. It is called the basic summary because you call it basic summary device because it sums up the account sums up the balances of a certain account. So that's why it's called the summary device of accounting, I guess. So the account shows the balance of a certain account, like the cash, which is the example on giingon ganiya. It shows the movement of cash and yeah, pailalan ko kasabot sa pangibasa. But anyways, move on. So how do sole proprietorships, partnerships, and corporations differ with regard to equity? So how do sole proprietorships, partnerships? So sole proprietorships usually have only one owner. No, it's not usually. The sole proprietorships have one owner, so there's only um, one capital account in there, which is the owner and the owner's withdrawals and deposits. Additional deposit. So yeah, and partnerships have more capital accounts depending on how many partners are there. Like if there are 3 partners, then each of the partner would have one capital account for them each. And corporations, I didn't read but yeah, corporations would have the shareholders equity, and the shareholders would divide the income depending on other agreements. So yeah. And so how can the owner's equity be increased or decreased? How can the owner's equity be decreased or increased? So the owner's equity can be increased through additional, so may term ay gigamit, deposits pa na. So additional additional investments and the investments that are deposits. So yeah, the owner's equity can be increased through investments by an owner or income. And it can be decreased through withdrawals and expenses or losses of business. So what is the basic accounting model? So the basic accounting model is the asset is equals to liabilities plus equity. Discuss briefly the theory of the double entry system.